Welcome to Web3 Watchdogs, the podcast that takes a deep dive into the world of Web3 security, compliance, and risk. Join Michael Pearl as he interviews executives from across the Web3 industry to uncover the challenges and opportunities of this rapidly evolving space. Web3 Watchdogs is sponsored by Cyvers, your one-stop shop for Web3 security and threat mitigation. Cyvers harnesses the power of AI to eliminate hacks, scams, fraud, and compliance challenges in real time, and even before they happen. For more information, visit cyvers.ai. That's CYVERS.ai.
Hello, everyone, and welcome to the Web3 Watchdogs, the podcast that focuses on everything security, risk, compliance, fraud prevention, and basically everything that is interesting in the Web3 community. And today we have a very interesting guest. We have Pasi Koistinen, who is the Chief Information Security Officer, the CISO of CoinHacko. Before we dive into the conversation, one small request from my end. If you like the podcast, please subscribe on Spotify, on YouTube, hit the like button, share it with your friends, and do recommend us to everyone that you find relevant for this podcast. Pasi, hello.
Hi. Hi, Michael.
Very, very happy to have you here. I know that you have
My
an
pleasure.
extensive background. Thank you. I know that you have an extensive background, primarily in security. You have founded quite a few security companies, and then you landed at CoinHako. So please, could you elaborate on that, on your background? When did you join CoinHako, and what does your role include?
All right. So that's quite a question now. Long story. Last quarter of the century in security, specifically cybersecurity. So yeah, like you said in the intro, thank you for your kind words first. Yeah, I've been in the cybersecurity since I guess year 2000 in all kinds of roles as a CISO, as actually COO, founder of cybersecurity companies, head of security, just name it. I've seen a lot from different angles in the industry. And I've seen all kinds of bad actors along the way, and hacks, of course. I joined CoinHacko about 3 years ago, 3.5. And my motivation was both personal, but also I was very interested in the specific threats and the threat level that crypto faces. So the industry as a whole has a bit of a, I would say, unique position in the financial industry. So we have pretty much all the threats that a typical bank would do, and then some, as you're well aware. So it's a specific. I already knew quite a bit about crypto since I was previously working on my startup with dark web threat intelligence, that sort of things. And as you know, crypto is there too. So I had a good intro to the industry. But it's been very interesting here in crypto world, looking from inside.
Not a dull moment. So, for the sake of the people that are not perhaps familiar with CoinHako, can you elaborate on what type of services do you provide? Who is your audience? How many users do you have?
Right. So CoinHacko is a local crypto player in the industry. So you wouldn't find us in other countries besides Singapore at the moment. We do have some ambitions on a regional scale. So basically, CoinHacko is a crypto exchange by Singaporeans and for Singaporeans. That's the tradition where everything started about, I think, 8 years ago. Was it even more? Anyway, one of the first players in the market when crypto came out. Yeah, if you talk to people in Singapore, pretty much everybody would know the brand. So that's sort of a company. It started from this consumer-centric experience, how to get easily into crypto, but then some years ago, it started to diversify to more institutional side as well, and it's grown ever since. And I think they're kind of balanced at the moment, 50-50 or somewhere there. So yes, serving both institutions nowadays and consumers.
Very interesting. And you mentioned your shift from the Web 2 world, the more traditional cybersecurity, and into the crazy world of Web 3 crypto and its security challenges. What have you seen upon shifting, to that new industry? What type of threats, what type of risks have you spotted that you haven't seen in your previous ventures?
All right, now that's a good question. I think we all share in the business world between all the kinds of companies the generic cyber risks. So I'm just going to leave that layer out, basic layer of security. But then we come to the financial industry where you move vast amounts of value assets in digital format. banks do that with their fiat money. Crypto does it with fiat and the crypto. So each of those layers kind of adds to the previous ones. So I would say that financial industry companies like the banks would be the next layer of scrutiny and security on these kind of general, then the banks. Now we have the crypto here too, with the quirks of the digital assets. And I think what's specific here is that due to the nature of technology and being so technology centric and distributed in many instances, we have very unique risks that other players won't have anywhere else. Let's say you do some sort of a DeFi project or handle vast amounts of DeFi, then all of a sudden your infrastructure is partly outside of your control because it's how that thing works. It's distributed finance. So yeah, there's that. And then the threats, again, they are very, very specific as well. There are groups of bad actors who target crypto specifically. Just to name a few, maybe a couple of groups in North Korea, Lazarus Group and affiliates. They have been probably the worst nightmare of any CISO in the industry.
That's for sure. So you mentioned some of the risks and you mentioned DeFi, but obviously CeFi and centralized exchanges more in specific have their own risks. And I
Yeah.
would love to approach it from the angle of Bybit because I'm really curious of hearing what was your response when you heard it. Obviously, it's not the first, right? With Xerex and we had other centralized exchanges being hacked, even in the last year or so. But Bybit was definitely unique. So I'm really curious about the experience of a CISO of a centralized exchange the moment after Bybit. What do? Man the gates? How do you check if you're not the next one? And how do you make sure that your clients will not be affected by the next hack?
Right. So maybe just to go through what happened. So almost $1.5 billion were stolen from Bybit in this hack in the form of Ethereum from their wallets that were supposed to be cold offline wallets, multi-signature scheme where you have the exchange had these physical ledger devices. They tried to be secure, but what transpired was that basically they were fooled into signing, or the multiple signers were fooled into signing transaction that seemed to be okay. Everything on the surface looked like, okay, this is the amount coming in, it's going to the right wallet, and so forth, so on. All the checks passed. And finally, the CEO signed it as well as the third signer, and it passed. But what they didn't see was that there were instructions in that signing request that were not shown in the user interface. So in order to use this physical ledger device, which is like a USB stick, you got to connect it to a computer and use typically a browser extension or software to see what kind of transaction is coming in for a signature, then communicate to the secure offline device and then get that signed. The keys never leave the ledger, but they didn't see because the user interface of that signing software hid those blind signing requests, and hence they signed something that actually authorized the attacker, the malicious attacker, to take control of the smart contract, ownership of it. So the attacker basically gained ownership of the whole thing, and then they were able to transfer those assets out. So yeah, what happened here after that? Of course, we took note of it immediately, and I think it was more than just us. Of course, every single central player, every single user of that custody solution that they use, safe.global, every single one was alarmed probably the next day latest. And I think it shook some of the foundations behind custody solutions because crypto exchanges basically they hold quite a bit of customer assets under the custody. And if you had used that sort of a solution or any other solution that relies on the similar architecture, meaning multiple signers, ledger devices, then you communicate, yada, yada. They were forced to re-evaluate potential vulnerability and what sort of controls are needed to screen all the transactions or even shift to an entirely different architecture entirely. Not use that sort of multi-sig scheme at all. So yeah, it did cause a lot of talk internally here. We had to review our security practices and make sure that nothing like that could happen to us. Having said that, our exposure wasn't that large.
Yeah, it's interesting. Actually, what you mentioned earlier, one of the main reasons for that successful hack from the hacker standpoint, right, was the blind signing, right, which is a
Yes.
huge problem, a huge challenge now in the industry. Coincidentally or not, Ledger issued their transaction check a few months later, and we are proud at Cybers to collaborate with them and to be part of their basically security providers for that feature that allows you both to see what you're signing, but also to get an assessment on the maliciousness of the outcome of what you're signing. And I'm really hopeful that now it will impact the industry for the good, and that people will start using that, and this will minimize or even nullify the chances of something like that happening. What is your
Correct.
take on such solutions like off-chain simulation of transactions, pre-transaction simulation? Is it the way to go to prevent those future hacks with or without the multi-sig element?
Well, it's one of the ways. But before we go to the details, I think looking from like a outside perspective, it's about more than that. If you think about being a central player or exchange or a bank, you're supposed to screen your transactions coming in and out from your customers and make checks that they don't break any, let's say, OFAC rules. You're not transferring funds to individuals or countries that are on blacklist and so on and so forth. And then you would do some transaction risk checks automatically and hold them and have humans inspect them if there's anything to worry about. Conceptually, I think it is the same thing that we should be doing for custody funds that are, let's say, in warm or cold wallets instead of those hot ones, whereby, hot wallet, warm wallet, cold one. If it's not a familiar term to everybody, hot ones are the ones that are typically connected to the trading systems that we interact with. Let's say we open a exchange with our browser and use it. So those transactions fall under that category where we do automatic checks, of course. But in case of Bybit, the transaction monitoring and risk checks, of course, were not done in the similar fashion because they were not involved in that hot wallet usage customer-facing checks. But then the question arises, why wouldn't we use the same kind of scrutiny for big transactions that we do at the back end with the custody assets? I think it's fair to say that we should. Given this example, 1.5 billion were stolen. Of course, there's plenty more that companies can do, not just that, but I think it's one of the things that they should be doing.
Yeah, I'm always surprised, in the Bybit hack and with the WazirX hack, I'm always surprised to see how everything becomes a routine, right? Even when you transfer $1 billion, you do it almost on a daily basis, and then you get accustomed to it. And then we're only human. So at the end of the day, people that target humans and that do it in a social engineering manner plus some technology, they can basically trick us into signing it just out of routine, just to check the box and hit the button. So yeah, I
Correct.
totally agree with you on that. You need more technology and you also need more awareness and education, that's for sure. And I wanted to ask you, so you've mentioned with respect to, obviously we discussed the internal backend side of things, but you also mentioned the incoming funds that you're screening them and you're making sure that they're not OFAC sanctioned or, illicit funds of any manner. But let's say in the case of Bybit, right? We were part of the team that helped to trace the funds later. And in many other cases, not only in hacks, in fraud cases, scam cases, we see that illicit funds that are being stolen either from individuals or from exchanges or DeFi protocols, they find their ways into centralized exchanges and quite prominent ones. So my question is, what tools and what procedures do you have to identify the incoming funds and to make sure that they're not illicit funds, whether it's OFAC sanctioned funds or maybe even just funds that originate from a hack?
Not go into the details, of course, but in general, I think exchanges
It's okay.
should.
It's only me and you on
Yeah.
the call here.
Yeah, that's right. So I think in general, the exchanges should use some sort of API-based near real-time checks to do that. So that means that we're supposed to subscribe to a service that does these checks for us and returns whether it's a risk or not, so that the humans can then interact and check what's it about. Maybe it's a risk check, a high risk transaction that you have to approve separately, or maybe it's flagged as a true positive immediately. But yes, this sort of a service has to be implemented in line with the processing of the transactions, whether they're
Yeah.
coming from customer interfacing functions, let's say sales or online trading, or whether you are interacting with the custody side of things. So I think it would be fair to do the same kind of scrutiny on both sides. By the way,
Yeah.
I'm very glad that you mentioned the Wazir X hack, which was more than a year ago.
Hmm.
It turns out it was done probably quite surely through the same custody solution, safe.global. And in all likelihood, it was there sitting for everybody to learn about for more than 8 months before this Bybit hack happened. So it's a shame that the industry didn't take note of that before this big one happened.
Yes, yes, I totally agree with you. The WazirX hack, in my personal experience, it's a major event because we were the ones that basically let the founders know about the hack. At first, they didn't believe us, and then things started escalating and cascading from that point. And it was a huge scandal. It still is a huge scandal in India because so many users were affected. You mentioned the fact that CoinHacko is a local
Mm.
Singaporean exchange. They were probably the biggest exchange in India, and this has shocked the industry, but maybe not enough, right? Because as you said, 8 months later, almost the same thing happened again.
Yeah.
Um, I'm curious. So we talked about the security element. Let's talk about the fraud element, because one of the biggest challenges right now for especially for centralized exchanges that are dealing with retail users basically is fraud, and more specifically authorized fraud, and even more specifically pig butchering, all the different investment scams and romance scams and so on. And I'm curious to know how you go about it. First of all, in the perception, if you go to the reports in the literature, usually they talk about, flowing from Western countries into East Asian locations like Myanmar and Vietnam and so on. I'm curious to know how widespread is this phenomenon in Singapore, and how do you go about it? How do you protect yourself from such vectors of attack?
So obviously we do, like I mentioned previously, the API kind of integration with these external checking tools and services. But we also have built in-house solutions for monitoring risk related to these fraudulent transactions. I think we are actually doing pretty good on that side. Typically, when these cases come up on the table, I think the distribution of cases is about 90 to 95% is scams of different types, like investment scams and others. And then the rest are hacking, or you could say that cyber attacks against exchange users. So vast majority is that. So when these come to a table, of course, they are identified either by customer contacting the exchange or we flag it automatically. This usually leads to manual intervention by our staff and inspection, asking for additional information before approving and releasing any assets for use. So it's got to be in any exchange the automated process. There's just too many transactions to handle manually and inspect manually. And there's got to be a human in the loop. Where I think this is going in the future is that it's going to be even more heavily influenced by machine learning and AI, meaning the services that the exchanges are using and the tools that they're using to flag these transactions are going to inspect the transactions, not just whether they're coming from one unknown bad address or sanctioned address, but also the trail behind them and the intersections between other kinds of crypto chains and assets. So that sort of a development is to be expected.
Yeah, I think it has already kicked in. I can tell you that we are investigating millions of endpoints of data, and you see that basically this type of work of automated tracing and of identifying the clustering and the relationship between, the different addresses, and eventually building the fraudulent network roadmap, right? And pinpointing all the addresses, which is basically what you need in order to protect yourself from interacting with those wallets. It is not something that can be done manually anymore. The times
Yeah.
of, the manual investigators that used to sit on the scanners and identify and jump through every endpoint, it is already very much obsolete. And right now you need automation. And beyond that, you need the help of AI to contextualize the data that you're getting from all those endpoints and the relationship between them. So I totally agree with you on that, and I think that this is the way to go. And by the way, it's already here, right? So we're
Yes.
already using it. I wanted to ask you. So you've mentioned in the beginning that you're a local exchange, right? So Singapore is quite a unique location for crypto. First of all, on one hand, super crypto friendly. From what I've seen, and I've been to Singapore quite a few times, people are very savvy with respect to cryptocurrency. The usage is quite widespread, but the regulators are, should I say, tough but fair, right? Because you have the MAS, which is obviously a trendsetter in many ways in the regulation, in the crypto regulation worldwide. What is your experience of working with the MAS and with the other regulators? Do you think that there's an enablement atmosphere in Singapore? Give me the behind the scenes.
Yes, I've had the pleasure of working with MAS and government on that side. And I think you're right to say that they're tough but fair. So Singapore is a well-regulated environment. And the regulation is more advanced than pretty much anywhere else, which is a good thing for crypto users. And let's say somebody signs up with our service at CoinHacko, they can be sure that it's under the regulation of one of the strictest in the world. So that gives them some assurance that they can't get anywhere else. If you sign up with the unknowns exchange that is registered to a paradise island somewhere, which you don't even know, then what kinds of assurances can you even get? But when it comes from the law itself, then that's a different matter. And it levels up the playing field here locally, of course. It means that everybody who comes here in crypto, they have to comply. There's no other option. So you cannot get, let's say, benefit from coming here regulation-wise for your business because you will be heavily regulated. But then again, your customers will get the benefit of added trust. So that might bring in other types of customers in with
Yeah,
that assurance.
I totally agree that the Singapore regulation and license basically gives you a stamp of approval of high quality regulation and high quality standards.
Yeah.
I'm curious, we talked about the security element, the fraud, and so on. Do you think that this is something that should be regulated and codified into law, or should it just be a practice that exchanges and other crypto companies should implement, but not as part of a legal framework that basically confines you and mandates you to utilize those types of tools?
Maybe it's not my position to say whether it should or shouldn't, but I think that given that we have many cyber incidents in crypto and a lot of scams going on, I think it will be. That's the outcome. Because if the industry is not able to regulate themselves and manage these risks adequately, then the regulator will step in at some point. And this will mean that regulation-centric societies like, let's say, Singapore, but others too, they will be the first ones to implement these kinds of rules and impose it on exchanges. And then there will be other jurisdictions that are lax with less regulation, less assurances, and higher risk. So that's going to set some players apart at the market for sure. And I think different kinds of customers will seek different kinds of service providers then. Let's say if you're a family office or a wealthy individual looking for crypto and you want a partner that is reliable, maybe you would look for Singapore then.
Yeah, and beyond the legal the legal framework, there's also the element of responsibility and basically the element of being obligated to either make the victims whole again or to reimburse them in some other way. And we've seen quite a few regulatory moves on that end in Singapore, in Hong Kong, primarily in the UK. Right, and now even in the US, the fact that from a consumer protection point of view, if you have a user that was hacked or scammed, you might be obligated to reimburse them with the amount that they lost or maybe even more than that. What is your take on that? Because that's something quite different from just being responsible for the security and the safety of the system. And then by having an actual price tag that you have to pay for every single individual that was scammed on your platform and that was able to prove that.
Consumer protection has been in the limelight lately. If we look at that side first, Singapore actually came with the Singapore, what's it called, Consumer Protection Guidelines for Digital Assets. It's basically a half a year old guideline right now, so rather new. And what it says is simply that exchanges have to custodize one for one all the customer assets and keep them separate, safeguard them separately from, let's say, company's own assets. Don't mix them. And this is to ensure that whatever happens, custodized assets would be there. Whatever incident happens, you still can always give the assets back to the customers. I've been working closely with this myself, and it's been quite interesting. It changes the playing field again, because I know that there are jurisdictions where you can go to an exchange, they custodize your assets, but you have no idea if they custodize them or not. Keep them separate and safe. That means they might be actually playing poker with your assets, for all you know. But in Singapore, that's not legal, so you can be pretty sure that when you deal with the Singaporean exchanges, then they have to custodize every cent for cent or dollar for dollar.
Yeah, that makes sense. So before we wrap up, just kind of a more general question, and perhaps to have your kind of free opinion on this. Where do you think cybersecurity in Web3 is going? If you could give one piece of advice for other CISOs that perhaps don't have the same experience as you have, what should they focus on? What should be the main thing that they should focus on to prevent themselves from becoming the next Bybit or from having their clients scammed and defrauded and so on?
That's a good question. Where are we going? Well, one thing's for sure, the other megatrends will start affecting crypto. There already are. Let's say AI. That's a big change. So what we are seeing in the industry is a massive shift in the volumes of scams. Let's say fake websites that use lookalike domains with a twist, and amount of very high quality phishing emails, amount of spear phishing, all kinds of scamming schemes. And all of those are being automated to the level where security teams need to keep up and try to catch up with all of those alerts being generated. So I think that is one thing. And from Defender's side of the equation, it means that the Defender teams will first of all learn and educate themselves about how the attackers are working. Why are they able to all of a sudden double or 10 times their volume while also increasing the quality of their attacks, meaning better scamming, better phishing, better targeting, faster reconnaissance, and so on and so forth. So if we don't understand how the adversaries are doing it, it's pretty hard to defend against it. So I would say that the advice from my side is that if you have a security team, you need to get them AI tooling, education, learning, licenses, whatever you can to catch up with this development, because AI is already here. Attackers are using it. And we are trying to catch up with the security industry. And I know that if you hire a guy with the security history, a long career, there's not a lot of those guys who also have done a lot of AI. It just happens I'm studying myself in an AI doctoral program in a US university, and I happen to kind of follow this very closely because of that. And one of the big goals for myself is to have my team to learn as much as I can about AI in defensive uses, but also understand the attacker side of the thing.
Yeah, definitely. I think it's a brave new world. We're about like a week or two after the latest releases from Google, and you see that some of the things that were considered to be science fiction, let's say a year ago, right now it's reality, right? And you can imitate anyone. You can create high quality videos that you cannot really differentiate between them and the real world. Voices and to generate new websites in seconds. So I think that definitely from the attacker side, we're going to see that. And as we said earlier, the defender side should also arm themselves with the proper AI tools and learn how they can utilize AI for their benefit. So it's a very good take from your end. Are you active on LinkedIn or on X? Where can we find kind of your writings, your posts?
Thanks, Michael. Mostly in LinkedIn. So I try to share some stuff over there, but I also try to write a book once in a while. Just released my latest book about cryptocurrency security. It's on Amazon, and It's my second book in the series. So
So please do tell. I'm not gonna wrap up before you tell us about the book and recommend
so
us.
after some time being here in the middle of crypto world, I just thought that maybe it would be good to share these learnings because it's quite hard to come by shared experiences. And so I decided just to put all of that knowledge between the pages and released the book actually a couple of weeks ago. It's about security of cryptocurrencies. The name is WTF, Where's My Crypto? And on Amazon, of course. There's another one too. The other book is called Smiling Security. It's more about the security management, how to manage security in a company and how to get a good cybersecurity manager. Two for now. I'm working currently on a third book, which is coming sometime later this year about intersection of AI and cybersecurity.
Very interesting. So perhaps we can have a separate talk about time management and how you manage to be a CISO and to write 3 books, but that's for another call. So I'm going to put the link to the book in the show notes so that people that would like to read it can have a look. Pasi, thank you so much.
It's been my pleasure. Thank you.
Web3 Watchdogs is sponsored by Cyvers, your one-stop shop for Web3 security and threat mitigation. Cyvers harnesses the power of AI to eliminate hacks, scams, fraud, and compliance challenges in real time, and even before they happen. For more information, visit cyvers.ai. That's CYVERS.ai.